Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be taking a look at generating some trade ideas while the markets are at all-time highs. Now when it comes to the all-time highs, it's probably one of the easiest slash hardest things to trade into because, well, we don't have anything else to work with, right? The only thing that we can do when we're at all-time highs is project where we think the market is going to turn around. You're essentially buying high, hoping that it goes higher, right? Which is not the type of trade plan that I like personally. So what we're going to be looking for is kind of a general idea of what's been going on with the markets overall, right? See what's happening, see what's going on, and just kind of get an idea of, well, we don't want to buy way up here hoping it goes higher, but where can we buy if we start looking for some other things of interest? So one of the first things that comes to mind when we're looking at a pullback, right? Buying the pullback, which is one of the most important things you can do when the markets are at all-time highs. Like I just said, I don't want to buy at the high hoping it goes higher. Lately, that's been working fine, but the problem is when it doesn't, it's going to hurt, right? It's going to hurt a lot of people when buying high going higher doesn't work, and it's going to shove a lot of people out of their accounts that they weren't necessarily intending on. So what are we looking for? Well, we're looking for repetitious movement, right? Something that's happening over and over and over and over again. And the reason why we're looking for that is because when we're at all-time highs, we don't have anything else to work with. There's no levels of structure. I mean, there's little micro swing highs and swing lows, but that's typically not good. It's not like something like over here where we've got this monstrous level of support or resistance to come back to. That's too far away. So we have to zoom into a faster time frame and look for, okay, well, where are some repetitious moves that give us an idea of where the market's going to pull back to? Now, something very interesting that happened on the 15-minute chart not too long ago, if we go back, gives us an idea of what we're talking about here. So if we go down here, going off of the idea of repetitious moves, and we can draw our Fibonacci tool from the bottom to the top of that swing, right? That swing. And this is where things get a little bit interesting, because we have a 50% pullback that is respected very, very well, right? That response there is beautiful. And then we continued up and broke out to a new high. So what we can do is we can continue that drawing to the upside and look for the market to repeat itself. Drawing from that low now, because that's where it pulled back to 50%, we want to see another repetition. And that's exactly what happened. The market came back to 50%, popped up, and went through a new high. Perfect. Let's keep going, right? Continue that repetition. From that new low, we're looking for a 50% pullback. This one actually went 61.8% pullback. In this case, it's not good enough. That doesn't follow the repetition that we've been seeing, but this is something to be noted of, right? We pulled back to 618, still went up to a new high, and then there was a subsequent pullback after. If we measure that one up, you'll see something very similar. 50% pullback doesn't breach the 618. We're continuing that repetition over and over and over again. So what are we looking for next? Well, you guessed it, we're looking for the next 50% pullback. So if we zoom way out here and we go to the end of the chart, ooh, a little too far, and we're looking for the 50% pullback. This barely pulled back 30%. No pullback, no pullback, no pullback, no pullback, and we finally get a pullback. And guess where it lands? Well, it lands on 50% and buyers defend it. That's a great sign that we're getting that repetition, but never made a new high and then dipped into that 618. So what do we know about this based on what the market has already told us typically happens? We pulled back to the 618. We still rallied up to a new high. So we're now looking for that continuation of the repetition down to 50%. Now, it might be from here. It might be from up here. We don't know when the high is going to end, but when it does begin pulling back, these repetitions can give us a very good idea of where we should expect the market to pull back to. Right now, that's 32.23 and a quarter. That could take days, weeks, could be tomorrow, right? You never know with these markets. It only takes one tweet to get things moving. But that's what we're looking for, is that repetition over and over and over again in the market, giving us clues. Now, we can take this one step further and say, all right, well, we know there's a repetitious move there, but let's look at the bigger picture. On a daily chart, there's barely been any pullback since, October? So we're in the same situation. Not only are we dealing with this massively bullish trend to the upside on the 15-minute chart, but if we zoom out to the daily chart, we're dealing with the exact same thing. So how do we get the same information? Well, in this case, we don't have enough to really follow suit with the fibs because we don't have an anchored good swing low down here to really measure off of. But what we can do is look at the reactions, right? We rallied all the way back up to a really strong high and then a deep pullback. It was about that distance. But what happened the next time? The next time, it followed through with that same repetition, same pullback distance. So what can we expect if we begin pulling back on the bigger picture? We're probably going to see that same pullback. Now this is where it gets even better, because now look where this equidistant pullback is coming into. The major swing low trap and major swing high retest. It's creating a monstrous zone of interest to keep our eyes on, and it's all on the backs of just waiting for the repetition to come to fruition. Buying at the highs, hoping it goes higher is great until it's not. So when it's not, we have to look for something that stands out, and this is something that blatantly stands out. Looking at the more interim picture on the 15-minute chart again, we can see there are a few other clues to take away from this. Those repetitious pullbacks like we had here lined up very well with here. Went a little bit through it, but same thing. If we start pulling back here, look where that puts us. Right back towards that 50%. See how everything is beginning to line up? That's because all of the traders that we're working with right now, well, they don't have anything to work with, right? There's nothing at the highs to project for other than maybe measured moves or Fibonacci projections. But what they're waiting for more is for that dip, right? Let the market pull back, let the buyers take profit and cause that nice pullback to an area of interest like we have here. And then things start getting very interesting for buyers, right? Buyers start coming in around those zones looking for that move back up and that continuation of the repetitious move. Now, we get some clues on the opposite side of things. What happens when the repetitions break down, right? Well, then we have to look at it from a different perspective. If we go to something like a 60-minute chart, and we can look at these repetitions and say, okay, well, if we know that we have repetitious movements going on in the bigger time frame, do they happen on the medium time frames, like a 60-minute chart? We have a nice move to the downside, follows through that picture-perfect one right there. We're looking for the next one here. If this starts breaking down and we start seeing them pushing back through this zone, what do you think is next? Right? Don't overthink this stuff. Very simple. What do you think is next? We're going to the next repetition. Keep in mind, the repetitions that we're looking at in the 15-minute chart are very fast time frames and very detached from what's happening on the daily chart. These are the types of traders on 15-minute charts, 5-minute charts that are looking for trades over the next, hour, 2 hours, a day or two. They're not looking to hold on for ages and ages. So if the repetition starts breaking down in the 15-minute chart, it's very simple. We're just going to the bigger one. There's nothing else to it. It's very straightforward. And that bigger one is all the way down into 3050s, 3060s. And things get very, very interesting from there. So hopefully it's something you can add to your tool belt and something to keep an eye on when we're at these all-time highs. These all-time highs can be tricky. You've got to play it very safe and very cautious because, well, we don't have anything to work with other than waiting for the better pullback for the longer-term positions. But something to keep your eyes on. Hopefully you found this useful. Hopefully you found it something you can add to your tool belt in terms of trading. As always, I hope you had a great day of trading. I hope you had a fantastic week of trading so far. And until the next video, we'll see you all then. Thanks.